The Zimbabwe dollar today inched closer to the $1,000 mark, trading at 928.5 to the greenback on the Reserve Bank's auction. The parallel has also surged and now stands at $1 United States dollar to 1,500 Zimbabwean dollars, and prices of basic goods and services have responded significantly. As ATN Prime's Patience Namburo was in the Central Business District in Harare earlier.
Last year this time, a 10 kg bag of maize meal would cost you 4,299 ZWL. But now, the price has gone up to 8,599 ZWL. A bottle of cooking oil which cost you 3,670 ZWL now costs you 5,139 ZWL. The theme is the same across all basics. Ordinary citizens can hardly keep up with the price increases, but those in business lay the blame elsewhere. They say the cost of doing business has been pushed up by rolling power cuts which force business to turn to alternative power sources. The power situation has been unforgiving to both the consumer and business.
If you track it from the value chain, the cost of doing business is gone up, and some of the issues, contributory issues, include the issue of power, which has affected value chains of very key products like grains, sugar, cooking oil, and bread, and most basics. So that is basically what can be attributable to the price increases that we are noticing on the market. Of course, the issue of the exchange rate, the disparity, the widening of the gap between the official exchange rate and the parallel market exchange rate in an economy that has continued to carry forward a growing shadow economy alongside the formal economy. You would ordinarily expect that such a market dynamic is not conducive for doing business, especially for formal businesses. So such key issues have affected the doing business and the ease of doing business across the many value chains in the industry and commerce.
Now, joining us to discuss the trends in the market is ZTN business correspondent Eben Mabunda. Very good evening to you, Eben. Had you predicted such a movement on the currency?
Good evening, Samantha, and thank you very much. Well, to respond to that, it's important to have context, particularly to understand how the Zimbabwe dollar fared in 2022. That is actually where we witnessed the Zimbabwe dollar depreciate by over 500% against the major currencies of the world, particularly the greenback. And also in that particular year, we saw the Zimbabwe dollar trading at premiums of up to 50% on the parallel market, which then sort of closed or narrowed as the year came to a close. Particularly in the month of December, the Zimbabwe dollar was trading at over 600 to the dollar on the formal market, vis-a-vis 1:1,000 on the parallel market, which was a gap of over 30% in as far as the disparity between the two markets there. And so getting into 2023, we opened the year at premiums of about 34%. And had now started to actually narrow in recent months, right up until February, where the premiums had narrowed to about 26% thereabout. And so what we're then seeing now is perhaps the Zimbabwe dollar on the formal market now trailing the movement of the local unit on the parallel market. On the streets of Harare, you have the Zimbabwe dollar trading at about 1,400 to the US dollar. That's of course on the black market. And so whether this is something that was foreseen, I would say that perhaps the profit in this particular sequence would stand to be the movement of the local unit on the parallel market.
Eben, do you see this trend slowing down or going into the second quarter?
Well, Samantha, not quite an easy one to actually tackle, I must say. But judging by what we have seen in the past and what we're witnessing at this present moment, it's a bit tricky to give a statement where that is concerned. But this is what we know, that we are seeing the increase in terms of the value of premiums between the formal and actually the parallel market. And as I said before, the movement of the parallel market is sort of giving an indication of where the Zimbabwe dollar is actually headed toward, especially where the formal market is actually concerned, which has in recent months actually trailed or followed behind the movement of the local unit on that particular market. But it is also important to actually have an understanding and an appreciation of some of the other developments that are taking place within this particular market. We saw the government actually raising the salaries for the civil servants. This has the impact of increasing the broad money in the economy. And so what you then find is there would be more RTGs actually chasing the United States dollar. And this tends to increase the demand for the greenback and results actually in a further depreciation of the local currency on both the formal market as well as the informal market. So this is what we do know at this particular point. Also, in line with what we've seen around the world, it is, should I say, a norm that during an election year, it is expected that expenditure is actually increased. However, the Zimbabwean Treasury as well as the central bank have given an indication that we will not see that actually taking place in 2023. So it remains to be seen. But should there be a further injection into the broad money aggregate, this would obviously have a run in terms of the stability of the Zimbabwean dollar in this election year.
Even before you go, let's take a look at what the people are saying. What is the market sentiment regarding the volatility of the exchange rate at the moment?
Well, where that is actually concerned, there are growing clamors by the industry bodies. For example, the Confederation of Zimbabwe Industries has been quite stern, requesting the liberalization or the floating of the exchange rate on the Forex auction system. Their argument simply being that it is important for there to be market forces at play on the formal channels, and hopefully this would curtail the movement of the foreign currency through the informal channels and bring some degree of stability or where the Zimbabwe dollar is actually concerned. As I said earlier, we're seeing premiums of between 30 to 40% playing out where the Zimbabwe dollar is concerned, and perhaps a healthier one would be perhaps in the region of 20%. But Zimbabwe has not been able to achieve that in a while. So perhaps if that would actually be addressed and the exchange rate is floated, perhaps that could bring a certain degree of stability where the Zimbabwe dollar is concerned. That perhaps would be the market sentiment.
Eben Mabunda, thank you for that analysis.